Hey everyone, we've got a serious home insurance crisis on our hands. Premiums are skyrocketing nationwide, sometimes even doubling or tripling. If you're like me, then you're probably wondering, is this even legal? And when will it stop? In this video, we'll break down why home insurance rates keep going up so much, what your state is or isn't doing about it, and where I expect rates to head in the near future. First, let's cover what home insurance is and why it's a necessary evil for most homeowners. Home insurance covers property damage from things like fire, tornadoes, or floods. It also covers liability for injuries on your property and extra living expenses if your home becomes uninhabitable due to a covered event. If you have a mortgage like I do, your lender requires you to have home insurance to protect their collateral, which is your house. If you don't get home insurance yourself, your lender will force an insurance policy on your house and include it in your monthly mortgage payment. And trust me, lender-mandated insurance is usually the most expensive option, so it's really in your best interest to shop around for the best price. Because of this insurance requirement, people like me are stuck paying these crazy premiums because we don't have a choice. Either we pay for insurance or we risk losing our house. Home insurance companies calculate premiums based on factors like your location, the value of your property, the cost to rebuild, the amount of coverage you need, and specific risk factors like the chance of natural disasters in your area. But why are so many people seeing their premiums double or even triple recently? One big reason is persistently high inflation. The cost of building materials and labor has shot up over the last few years, making repairs and construction a lot more expensive than it used to be. Another reason is that insurance companies are seeing more claims due to more frequent and severe natural disasters across the country. But ultimately, the biggest reason why we're seeing such an extreme rise in premiums is that primary insurers lost a ton of money in 2022 and 2023. In fact, in 2022, the U.S. property insurance industry recorded a net underwriting loss of $26.9 billion, and things got even worse for them in 2023, with underwriting losses reaching $38 billion. In addition to inflation and more frequent natural disasters, these massive losses were the result of the primary insurance companies themselves not having enough insurance. You see, primary insurers are the insurance companies that you directly buy your insurance policy from, like Allstate or State Farm. Reinsurers are the companies that provide insurance to the primary insurers. So in 2022 and 2023, the primary insurers paid the price for not having enough reinsurance, and now they're passing on that price to us. So if we as homeowners have no choice but to get home insurance, how is it legal for these companies to charge us whatever they want? Well, primary insurers can't exactly charge us whatever they want. Each state has an insurance department that regulates premium increases. In California, for example, the Department of Insurance reviews and approves rate hikes to make sure that they're justified. Legally, insurance companies can increase their rates if they can show that the costs of paying out their claims and their own reinsurance costs have gone up. They need to back up these rate changes with sufficient data and statistics to prove the need for the rate hike. So while yearly increases are allowed, there are consumer protections in place to ensure that the increases aren't excessive. One major consequence of this approval system is that if insurance companies can't get their premium increases approved, they might just pack up and leave the state. Ultimately, insurance companies are businesses whose sole purpose is to make money for their shareholders. If they can't make money in an area because of too many expensive claims, then they'll leave. In fact, several major home insurance companies have pulled out of the California home insurance market because of the stricter regulation in the state. Companies like State Farm, Allstate, and USAA have stopped accepting new policies or left the market altogether. Florida faces a similar situation with many insurers leaving due to high hurricane risk and strict regulations. As these companies leave, many Californians and Floridians are left with limited options. often turning to the state-mandated FAIR plan, which is supposed to be an insurer of last resort. However, the FAIR plan is becoming the only option for many, and it's typically much more expensive than regular insurance policies. My house in Tahoe, for example, is on the FAIR plan. My premium is $5,000 a year, and that only covers fire. I'm required by my lender to get an additional wraparound home insurance policy for everything else, which is another $1,000. In Florida, Citizens Property Insurance, the state-run insurer, has become the largest insurer due to the withdrawal of private companies. So Florida's FAIR plan is also heavily relied upon, with many homeowners paying significantly more than they would if there were more options available. In Miami, the average annual cost of home insurance is $5,315. This insurance crisis may be the most extreme in states like California and Florida, but it's spreading across the entire country. Homeowners in states like Idaho, Texas, and Oklahoma have also seen significant rate hikes recently. In Idaho, average home insurance premiums jumped by 46% from 2022 to 2023 due to the high risk of wildfires, reaching an average annual cost of $1,510 in 2024. In Texas, premiums increased by 27% over the same period, primarily because of more frequent extreme weather events like hailstorms and wildfires. By 2024, Texas homeowners are paying around $2,951 per year. Meanwhile, in Oklahoma, severe storms and a high risk of tornadoes have driven average home insurance premiums to soar to $5,858 per year. These skyrocketing premiums are not just a burden for current homeowners, they also deter potential buyers, especially in high-risk areas. It makes sense that many buyers are wary of entering markets where they might be stuck with extremely high insurance costs. This makes home ownership in these areas less attractive and can significantly impact home prices. So, where are home insurance premiums headed in the future? Well, let's be honest. The current sky-high rates that we're seeing today are likely here to stay. The only real question is, how much more are they going to go up? My bet is that rates will keep going up significantly as long as the primary insurance companies are still losing money. Experts have mixed opinions on when or if premiums will stabilize. They say advancements in construction technology and increased mitigation efforts could help, but the frequency of natural disasters continues to pose a challenge. Honestly, I don't think either of those are really going to move the needle. Homeowners can take some steps to reduce their premiums by improving safety, disaster proofing, and bundling insurance policies like auto, but the potential savings from taking these steps is really only about 5 to 15%, and it's not going to offset the doubling and tripling of rates that we've seen so far. Potential changes in regulations could also impact future premiums. In California and Florida, there's an ongoing debate about how to balance the needs of insurers with the protections of consumers. Advocacy and consumer rights groups are actively involved in pushing for fair practices, but again, the cynic in me is really doubting if it's going to make much of a difference. To sum it up, rising home insurance premiums are influenced by economic factors like inflation, risk assessments for disaster-prone areas, the cost of reinsurance for primary insurance companies, and the regulatory environment that varies with each state. While these insurance increases are technically legal, they're placing a huge financial strain on American families, and eventually, something's gotta give. So share your experiences with home insurance in the comments below. Have you seen your premiums increase? Take it easy and watch one of these videos on the screen if you're interested in learning more about real estate and personal finance.